Good morning or good afternoon, depending on when you're viewing this slide presentation. My name is Dwight Slough, and I'm the owner-operator of DHS Financial Services, and I'm located in Harrisonburg, Virginia. I'd like to talk to you today about a concept that I believe is being overlooked or is not being addressed adequately in the business world today. That is protecting your assets and your lifestyle. And I want to look at this in terms of critical illness. When you ask most people, what's your most valuable asset? Most of the time you're going to get someone saying my 401k plan, perhaps their home. Very few people think about their ability to earn their income as a valuable or the most valuable asset that they have. So we give an illustration here that you have a 30-year-old couple who will earn $3.5 million by age 65 if their total family income averages $100,000 for their entire careers without any raises. Now, a couple of things. It's an illustration, it's an example, so nothing's perfect. But it's not hard to imagine a couple earning $100,000 or more during their lifetime and really each year, given today's economy. The part about without any raises, that's hard to believe because most people are going to have some type of raises. But if you look at the chart that they have here about your future earning power, if you are just a few years away from retiring, if you look at this and you're making $50,000 a year, then obviously you've got $250,000 in future earning power. But if you're a young couple that's in their 20s or 30s, then you can see that if you're making $50,000, you have the possibility, if you're 20 years away from age 65, that you can make $1 million. If you're 10 years more, if you're 30 years away, you have $1.5 million potential earning powers. So the questions that we're going to be looking at here is the fact that you've worked hard, you've used your earning power to provide for yourself and your loved ones, but what happens if a serious illness strikes? How are you going to protect those assets and the financial lifestyle that you have if you run into a hardship? Did you know? With advances in medical treatment and technology, many people now survive critical illnesses that would have been fatal in the past. Let's think about cancer. In the U.S., men have slightly less than a 1 in 2 lifetime risk of developing some form of cancer. For women, the lifetime risk is a little more than 1 in 3. Between 2005 and 2011, the 5-year relative survival rate for all cancers was 69%, up from 49% in 1975 through 1977. It's estimated that over 1.69 million new cancer cases were diagnosed in 2016. The Agency for Healthcare Research and Quality estimates the direct medical costs for cancer in 2013 was $74.8 billion, that is a billion with a B, dollars. That is staggering when you think about, for men, you're all about a 50-50 chance, and for women, about a 33-34% chance of having some form of cancer. But the good news, if you look at it, if you want to see the glass half full, is the fact that you have a greater survival rate for the cancers that are being diagnosed. So again, these are things that we need to pay attention to if we're going to look at some future earnings potential that could be taken away from us. Heart disease. An estimated 85.6 million Americans are living with some form of cardiovascular disease or the after effects of stroke. Heart disease strikes someone in the U.S. about once every 42 seconds. The lifetime risk for cardiovascular disease at age 40 is 2 in 3 for men and more than 1 in 2 for women. So you think about those statistics, men have what, a 67% chance of having some type of heart disease, while women have a 50% chance or more. Those are staggering numbers, and so this will probably continue to increase unless Americans change their lifestyle, which is sometimes hard to do. What about stroke? Someone in the United States has a stroke once every 40 seconds. Stroke is the leading cause of serious long-term disability in the U.S., and among stroke survivors, about 15 to 30% are permanently disabled. So thinking back to the slides that we had, when we talk about what's your most important asset, we talk about your earning power. If you're in that 15 to 30% that's permanently disabled, how are you going to cover that potential earnings loss that we talk about, depending on how many years you've got and what type of earnings that you have currently. It's an important issue that needs to be discussed. Ask yourself, if a life-threatening loss or illness strikes you, how long can you survive financially without a regular paycheck? How will your regular bills be paid? Will you have sufficient funds available to pay for your insurance, the payments, the co-payments, the deductibles? How about the alterations to your home or your automobile to meet any special needs? How about out-of-town transportation and lodging for medical treatment? How about additional household and child care expenses? That's one that often gets overlooked. If you have a stay-at-home person, they usually take care of the kids. If you're a two-family or two-earner income family, then what happens if one has one of these illnesses that causes them to lose their income? What happens when you're traveling to seek treatment? Who's going to take care of the kids if the other spouse is traveling with you? So that often gets overlooked when people are talking about or even thinking about these types of critical illnesses. Treatment's not covered by traditional health insurance. That's a biggie, because there are sometimes in the policies themselves where there are exclusions. The question you have to ask yourself is, if you're on a group plan, what are your exclusions? Do you even know? What about on an individual plan? Has anyone discussed those exclusions? Most of the time, being a broker, most of the time they stay away from those. They just tell you, okay, here's what your benefits are if you get sick. But 9 times out of 10, most of these brokers are not going to go and say, oh, by the way, this is excluded. You need to know what the exclusions are as well as what the benefits are in those major medical plans. How about short-term home health care during your recuperation? Are there a set number of days that you have available to you? What happens if you use those days? These are, again, questions that need to be addressed before any of these life-threatening illnesses strike. Heart disease and stroke rather. Let's look at some of the costs associated with that. Our nation's leading killers, heart disease and stroke, are the first and third leading causes of death for both men and women in the United States. About 801,000 people in the U.S. died from heart disease, stroke, and other cardiovascular diseases in 2013, accounting for 1 in every 3 deaths. Disabling. Every year, 750,000 Americans have a heart attack. 795,000 have a stroke. Heart disease and stroke are leading causes of premature permanent disability in the U.S. workforce, with nearly 85.6 million Americans living with some form of cardiovascular disease or the after effects of a stroke. The direct and indirect costs of cardiovascular diseases and stroke total more than $316.6 billion. This includes health expenditures and lost productivity. So what are we taking away from this slide? Well, we know the first and third leading cause of death for men and women would be these, heart disease and stroke. But what about those that survive? Because we saw that there's a 20% survival rate as it relates to cancer. What about those that survive a heart attack or they survive a stroke and they're permanently disabled? How are they going to be able to fund any type of additional expenses that they had never thought about? You know, the time to handle these issues is before you have the heart attack or before you have the stroke. Most of the time when you talk to a younger person that's extremely healthy, this is a conversation that's very difficult because they don't believe it's going to happen to them. Even though statistically it's showing from these slides and from the sources that's listed here, the 2016 heart disease and stroke statistics, it shows that it probably will, or there's a likelihood of a greater chance that it's going to happen to these younger people. Cancer. The financial costs of cancer are great, both for the individual and for society as a whole. For the year 2013, the Agency for Healthcare Research and Quality estimated direct medical costs for cancer at $74.8 billion. It's a huge amount of money. Are you protected? Have you had a conversation with anyone about these critical illnesses? Most people will probably say, if they're truthful, nope, never thought about it. What are some sources of funds that may be available to help you if you unfortunately have some of these critical illnesses? Well, let's think about Social Security benefits. Assuming that you qualify, and that's a big assumption, Social Security disability benefits do not begin until the 6th full month of disability and are generally not adequate to replace your earning power. In fact, the average monthly Social Security disability benefit received in 2015 was $1,166. So what you need to ask yourself is, look at what your monthly income would be right now and compare that to the average of $1,166. Is there a gap? Is there a shortfall? How would you address that? Let's look at healthcare insurance. While healthcare insurance will cover a portion of the direct costs associated with critical illness, these plans require typically deductibles, co-insurance, co-pays, and those can range anywhere from $2,000 to $10,000 or more in out-of-pocket costs to you before the plan pays 100%. Again, you need to, on an annual basis, look at your individual or your group policy and say, what are my deductibles? What are my out-of-pockets? What's my stop loss, if you will, if something happens to me where I need to use this medical insurance? If you elect out-of-network care from a specialist or a nationally recognized hospital, you may face significant additional expense plus the cost of travel and lodging. Again, these are things that you need to be aware of with the policies that you have. These major medical policies, whether they're group or individual. Do I have to begin a new deductible? Probably so. How about my out-of-pocket? Is that something that I would have to meet as well? Yes, you will. Because again, the key here is out-of-network care. Most plans, if not all of them, have a in-network, out-of-network. So even if you've met your in-network deductible and out-of-pocket maximization, you're still, if you go and elect to go out-of-network, you're still going to have to meet another deductible, another out-of-pocket. Traditionally, in the plans that I have seen, these are a lot higher amounts in terms of deductibles and out-of-pocket. In addition, indirect expenses associated with recuperating from a critical illness, such as modifications to your home or vehicle, child care expenses we talked about, convalescent care, may not be covered. It is important for you to know what your health care plan will and will not cover before a critical illness strikes. So if you have a broker or if you have someone at a company that administers these benefits, you need to have, at least on an annual basis, some type of conversation so that you can make sure that you understand what your benefits will cover and what they will exclude. And from a group standpoint, it's very important because most of the time on an annual basis, these companies are going out shopping different insurance carriers to try to lower the costs that they have to pay, which means they may be changing these plans on a regular basis, which means that your benefits will change as well. So if you're thinking about the old plan and now you have a new plan and you haven't looked at the benefits that are available to you and the exclusions, you may find yourself on the short end if you haven't taken the time to ask these questions and to review the different benefits that's available to you. How about disability income insurance? Talk to most people about that and they say, yeah, I've got something there at work. Well, you ask them, well, what type of benefits do you have there? Well, I don't know. Well, in most of these plans on the group side, they usually cap out at $5,000. Are you aware that if you get workers' comp or you get some type of disability from Social Security, that amount is deducted from that $5,000 on the group plan? So it's not $5,000 plus what you get. It's $5,000 less what your disability benefits would be from whatever source that you're getting. And as a result, you're going to find that most of the time you're not going to get 100% coverage on your income. The question you have to ask yourself in that situation is, can I live on less than 100%? Most people can't. So again, we need to look at this. Disability income insurance typically replace a portion of your income if you're sick or hurt and you're unable to work. If you are covered by disability income insurance, you need to know the answers to these questions, such as how long must you be disabled before benefits begin? How much is the benefit you're going to receive? For how long would the benefit be payable? And there are other questions that you need to address. Is there a residual income benefit that if I go back and I'm only working on a part-time basis that I can still receive some of these benefits? If so, how much and for how long? Again, these are the types of things that you need to be getting clarifications on before you need to actually find out that you don't have what you believe that you had. And again, it's not something that's uncommon. Unfortunately, as I talk to more and more people, ask them about their group benefits, they don't have a clue. How about your savings and investments? A single critical illness could consume the assets that you've worked a lifetime to accumulate. So ask yourself, if you suffered a critical illness and you were out of commission for 3 to 6 months, would you be able to survive financially? I think if you've been looking at recent USA Today columns and other columns in different financial periodicals, I think you'll find out that the average person is carrying a lot of debt, and they're going to have some problems if they have these critical illnesses pop up. Again, if the answer is no, there is a potential remedy. Critical illness insurance. It is a source of funds that you can use to help cover the indirect costs that arise when a serious illness strikes. By providing money when you need it most upon diagnosis of a serious illness, as defined again in the policy. You got to read the policy. You've got to make yourself understand what's there, even the small print. Critical illness insurance can help relieve worry about your finances so that you can focus on getting well. Critical illness insurance pays you a lump sum of money upon diagnosis of a covered condition. This money is yours to use for any purpose that you want with no restrictions. Since the premiums paid for critical illness insurance are not tax deductible, the benefits are not considered as income and are received 100% free of income tax. For example, critical illness insurance proceeds can be used to pay, how about your mortgage or your rent payments, as well as any other bills that you have. What about those health insurance deductibles, co-insurance, or co-payments? What about the cost of receiving the out-of-network medical treatment, including possible travel and lodging expenses? So, thinking about that little bullet point right there, out-of-network medical treatment, some of those lodging expenses, some of the travel expenses, these are things that, again, if you look at your policy, I promise you on the group medical or on the individual major medical plans, they're not covering travel. So these are expenses that you're going to have to pick up. Wouldn't it be nice to know that you have a policy that will help you pay for any of these types of costs that you have so that you don't have to worry about covering them? Treatment's not covered by traditional health insurance. Child care expenses during treatment of hospitalization. Modifications to your home or vehicle, shorter-term home health care. Again, critical illness insurance helps you to survive those financially stressful times while physically recovering from a serious injury or illness. What about what it's not? And again, this is important. Critical illness insurance is not healthcare insurance. Healthcare insurance is designed to pay the direct costs of an accident or illness requiring medical care. In addition to your responsibility to pay required deductibles, co-insurance, and/or co-payments, healthcare insurance is not intended to cover the indirect, non-medical expenses that can arise when a critical illness strikes, a role that critical illness insurance can play. Critical illness insurance is not a replacement for healthcare insurance. Again, critical illness insurance is paying those indirect costs that you're not going to find in the major medical policies that you have. Disability income insurance, the purpose of that is to replace a stated percentage of monthly income loss from being unable to work as a result of an accident or illness. Monthly disability payments, however, may not be sufficient to pay your regular bills plus the additional expenses of a serious illness. Again, my recommendation is to work with a qualified broker or insurance representative. They can mirror, and I can mirror, we can mirror, whatever, plans with your group disability. But we need to know what you have. We can, again, most likely, with an individual policy, coupled with the the policy that you would have with your group insurance, the long-term disability, we could probably cover close to 100% of your income. That's probably something that you want. That's probably something that you think you have now with that long-term disability policy, but you're going to probably find it's not. One other thing, you think about, we're talking about critical illness here, but just think about it from a disability income standpoint. People get pregnant. Pregnancies could lead to a disability. Not a critical illness, but to a disability. So again, what type of disability do you have in place to take care of that? Just a thought for you to have. Again, critical illness is not life insurance. While certain life insurance benefits may be available during life, such as a policy carrying cash values or accelerated death benefits, the primary purpose of life insurance is to provide financial security for your loved ones upon your death. Long-term care. It pays a stated daily benefit amount to cover the costs of nursing home care. Also, you have policies that will pay for assisted living and home health care benefits for the insured who is impaired and needs assistance with the activities of daily living, the eating, the bathing, the moving from point A to point B, those types of things. Again, it's not part of critical illness insurance. Cancer insurance. Cancer insurance plans pay only for the expenses related to cancer, typically reimbursing those expenses that are incurred for cancer treatment that you receive. If an evaluation of your current insurance and financial resources indicate that you would have difficulty surviving financially if a serious illness strikes, critical illness insurance may provide a remedy. It is, however, important to understand how this insurance coverage works. This is how it works. You ask these questions. What's covered? Well, critical illness insurance pays benefits from the diagnosis of a specified illness or illnesses. A basic policy should cover at least heart attack, stroke, and life-threatening cancer. Those are the three that we've identified as being most prominent. A more comprehensive policy should also include other serious conditions such as renal failure, multiple sclerosis, coronary artery disease, advanced Alzheimer's disease, and major organ transplant. What is the benefit amount? Again, you select that at the time the policy is purchased, and generally speaking can range from $10,000 to $100,000 or more. Again, this is something that is important when you think about it. People sort of buy insurance based upon what's it going to cost me. In other words, what's the premium? Well, you can go cheap here and you can get an inexpensive policy that's not going to cover everything that you may need in the future. And if you never revisit it and you just continue to pay that little dinky premium, then when you have some type of critical illness, you say, well, gee, I thought my policy covered that. And I thought it was for a higher amount. I can't tell you when I first started my insurance career how many people, when there was time for a loved one that had passed, when you present them with the what we would call the death check, they would say, is that all? I mean, don't we have more money coming to us? No. Because at the time that they took these policies out, again, the face amount apparently wasn't important to them. They were just looking at it from a premium standpoint. My point in all of this is simply saying, look, you need to make sure that you're getting the proper amount of coverage. And again, I understand everyone has fixed budgets and they have, other types of places where they want to put their resources, but I wouldn't pass up and go cheap on these types of policies. The benefit amount is paid in a lump sum upon diagnosis of a critical illness covered by the policy. Since the premium paid increases as the benefit amount increases, it is important to evaluate your other sources of funds available in the event of a serious illness in order to more accurately determine the critical illness insurance benefit amount that's right for you. So again, what they're pointing out here is that, okay, where do we have other types of monies that would be available to us that if we get the less expensive policy, which has the lower benefit amount, do I have something else as a reserve that would be able to cover the difference? Most people, if you believe the financial publications and the different polls that they're taking and asking people, most people don't have that money. And most people are not going to set that money aside and think that, well, 10 years, 15 years from now, if I have this illness, I can take care of it. You're kidding yourself. It's probably not going to happen. When is the benefit paid? That's important. The critical illness insurance benefit is paid to you in a lump sum upon diagnosis of a critical illness covered by the policy. Some critical illness insurance policies provide or pay a partial benefit, such as 25% of the maximum benefit, on the occurrence of certain specified treatments, such as coronary angioplasty or coronary artery bypass surgery. The policy usually terminates upon payment of 100% of the benefit. Does the policy have an elimination or qualification period? In other words, when do I get this started? Some policies require that for the benefits to be payable, the policy must be in effect for a stated period of time, such as 90 days, before diagnosis of a critical illness that it would be covered is made. Here's a checklist that we're going to look at in terms of helping us to evaluate critical illness insurance coverage and in selecting a plan that's going to be right for you. So, in purchasing critical illness insurance, it's important to select coverage that matches your needs and your preferences. As you evaluate various policy features and benefits, keep in mind that the choices you make can affect the premiums you pay and the benefits you're entitled to receive. Goes back to what I just said previously. Look at it in terms of covered illnesses. What serious illnesses are covered by the policy? How about the benefit amount? What's the lump sum amount payable upon diagnosis of a covered critical illness? Is the benefit amount payable in a single lump sum or in specified percentages or amounts? If the benefit is payable in specified percentages or amounts, does the premium decrease accordingly? What about your elimination period? Is the benefit payable immediately after diagnosis of critical covered illness? If not, how long must the policy be in effect before the benefits become available? Guaranteed renewable. Can you renew the coverage for life so long as you pay the premiums when due? How about premium increases? Under what circumstances can the insurance company increase your premiums? Return of premium. At your death, will your policy pay your beneficiary a refund of all premiums paid, less any benefits you receive from the policy? What about optional coverages? Are there any optional coverages available, such as inflation protection or an accidental death benefit? Since optional coverages generally require payment of an additional premium, carefully evaluate the value of any optional coverages to you and your personal situation. That concludes my presentation. I'm hoping that some of the things that we covered, some of the questions that I asked, would cause you to sort of sit there and pause and say, well, wait a second, I've never thought about this. I need to talk to someone, whether it's, again, calling me, and I've given you my contact information there, my office number, 540-438-0288, emailing me at dhslough@dhfinancialservices.com, or finding a broker or a representative that you feel comfortable sitting down with. One of the things that I would encourage you strongly is, I think, from the broker side of it, that groups are not being represented as well by the brokers in terms of explaining benefits and exclusions and the needs that may be popping up that's not part of your major medical plan. I think you need to sit down with someone. You need to be able to review your total insurance package, and you need to address some of these shortcomings. You may not be able to do it all at one time. It may be something that you do over a period of time, but it's something that you need to have a discussion with someone about. Because again, in our society today, these illnesses are real. The chances of you getting these illnesses are real. If you're unprepared for that, then how are you going to feel, not only when you're trying to recover from these types of illnesses, but how are you going to feel when you think about your loved ones in terms of how are they going to get by? We've covered some important items here. I think it's worthwhile for you to take some time to think about it. I would encourage you to go back and review the slide presentation as many times as you need to sort of either formulate questions or get it clear in your mind what type of steps or what type of things that you need to do to make sure that you're at least trying to address these issues, that at least you're trying to look at it in terms of, I'm not going to be blindsided. I'm not going to say, wow, why didn't someone say these things are available to me? Again, as I talk to people and as I listen to people, and they, it's always after the fact when they're sitting in front of me and they say to me, well, gee, I wish someone had said something to me about this. If I had a nickel for every time I heard that, I could retire today. I'm saying to you, it's important enough that you take the time to meet with someone and sort of get an education. And again, you don't have to just stay with one representative and get this information. Go around and interview different brokers, different representatives. Ask them questions. Maybe one broker will raise a question that you go to another broker and ask them, how would you handle this? Again, these are decisions that are very, very important. They shouldn't be put off. They should be addressed, because your group plan or your individual plan is not going to be sufficient for that. You don't want to learn after the fact that you don't have the coverage that you need in place, and now you've created an unnecessary burden, an unnecessary financial burden on your family. So again, if you've got any questions or concerns, please feel free to reach out to me at the information listed on the slide. Thank you. Have a great day.